looked at the first three steps of building a disability insurance plan, the next step that we're going to look at will be choosing the appropriate type of contract. Now really, there are three different ways that we can structure a disability insurance contract. As a starting point though, we're just going to look at how, in the broad sense, a disability insurance contract works. And here's what we'll find. Let's imagine that I'm acquiring this contract today on October the 8th of 2009. So this is the day that I enter into my disability insurance contract. Now the insurance company that I'm dealing with says, from that point forward, we know for sure, Jason, that you're going to be covered for 1 year. So I know that for that next year, my coverage will stay intact exactly as I had originally purchased it. No changes, no shocks, no surprises. So I know for sure that I am covered now until October the 8th of 2010. Now, depending on the type of contract that I acquire, this will influence how the insurance company treats me going forward. If I buy a very elaborate contract, then the next year will look exactly like this year did. If I buy a less expensive contract or a more affordable contract, then this year my premiums might change or my coverage might change in some way. So really we have three types of contracts we can acquire. We can have the most elaborate, most expensive contract, which is what we refer to as a non-cancelable guaranteed renewable contract. We can have a slightly less expensive version, which also gives me, as the policy owner, a little bit less certainty. We can purchase what's just called a guaranteed renewable contract. Or we can purchase a cancelable policy, which is also known as a commercial policy. So if I buy this most expensive contract, I know now that the insurance company is going to be stuck with me. That is, regardless of what I've done during that year, prior, whatever you happen to have, that the insurance company is stuck with me. My premiums will be unchanged. And my coverage will be unchanged. Which is obviously ideal for most policy owners. However, you have to pay for that. It's the most expensive type of contract. So, if I want to reduce my costs, if I want a more affordable policy, well now I might choose a guaranteed renewable policy. And with a guaranteed renewable policy, what's going to happen is at the end of this year, at the October 8th, 2010 point, my premiums could change, or the insurance company might add restrictive riders of some sort. That is, they might restrict my coverage in some way. However, I do know, because the policy is guaranteed renewable, that they're going to renew my policy. Now, they're not going to do these things. They're not going to change my policy based on something I personally have done. Rather, what we'll see here is that my premiums might change based on my class. So let's say that I work as a salesperson. And my class, salespeople in Alberta, have had a high number of claims over this past year. Well, the insurance company says it's costing us a lot now to insure those salespeople in Alberta. We have to find a way to manage those costs. And the way they're going to manage those costs is by increasing our premiums or restricting our coverage in some way. Now, the least expensive policy would be a cancelable or commercial policy. And what happens here, I get to that October 8th, 2010 mark, and I find that I have coverage in place up until this point, but now, let's say my class had a very large number of claims, I might find that my coverage just ends. So here, the insurer can, exactly as the name implies, the insurer can cancel my coverage. Now, they don't want to cancel my coverage. Keep in mind, they're a business, and they do business by collecting premiums. They like the idea of collecting premiums, so they would rather not do this, but they will cancel coverage if they find that there's been a very large number of claims from a particular occupation classification. They might not cancel my coverage, though. As with our guaranteed renewable policy, they might try and keep me around, but ask me to pay more money. Or they might again add those restrictive riders. So these are the ways that we can put the contract in place now to cover somebody in the event of disability.